If you know where this quote is from, leave a comment. Remember, there are no shortcuts, son. Quick buck artists come and go with every bull market, but the steady players make it through the bear market. Kane, that's kind of where I feel we're at right now, because I keep bumping into people that they're acting like I'm Jordan Belfort because I'm up 50%, and I'm like, the whole goddamn market went up in a straight line. Everybody won.
Yeah.
From like financial planners to individual investors. Yeah, everyone looks smart in an irrational bull market where shit's just going up to go up. I don't know if you've experienced this at all or not.
I mean, a little bit. I feel like that like my circle of friends will typically, or people that I meet will typically talk about stuff like this nowadays, and I feel like it's a new topic of conversation. My circle of friends are on like Instagram and things all of a sudden start posting things about the stock market that's never happened before. And then I also find that even when my wife and I go to restaurants and things, the tables next to us will start talking about stuff like this too, which I feel like is a new phenomenon. So I'm with you, definitely.
And it's just one of those things that we talked about it in an earlier episode where it's like you never hear about anyone's losses.
Yeah.
Like when they go to Vegas and you said, everyone broke even. Or
yeah, right.
Everyone I know that ever went to a Michigan casino and they're like, oh, I did okay. At least got my hotel paid for. My bullshit.
Yeah.
And now when the market's just going straight up, you run into these, financial planners and they think they're Jedis at the market and they are masters of the universe. And dude, I can go get a rescue dog and say, bark if I should buy this stock. And if he barks, I can buy the stock and I'll probably make 50%. And it's like anyone can, the market, it might be cooling off, but for the last, since November, it's been going, it's crazy. And everyone looks smart until the downturn comes. Now that could be this year, next year, 5 years, who knows? But all of a sudden you're going to stop hearing from those people. And it's the funny part of the markets. It's everyone wants to take credit for shit they had nothing to do with. It's, everyone's kind of winning right now, except for short sellers. So whatever. It's a pet peeve, but I find it funny because I lived through 2001 as an investor in the stock market. And when I was maybe 18, 19 years old at a consulting gig, this old timer who had a bunch of money is like, look, you got to rest your money. You get some big wins, you pull the money out. You make another investment. If you make some money, you pull the money out. He's like, you got to rest. He's like, it's like that steak you put on the grill and you cook that shit perfectly. He's like, you take that steak off the grill, you don't cut it. You let it sit there for 10 or 15 minutes, you let it rest. He's like, let your money rest. It's like, this is how you can, you might miss out on some more upside, sure, but you also can calculate mitigating some risk. And that's about the only reason why I walked into my accountant's office in 2001, whatever, 2000, whenever that crash happened, 2002, I probably did taxes. And I was one of the few people in their whole firm or of customers that actually had some profits. And he's like, what's your key? And I'm like, I let my money rest at the right time. Like, I didn't know. I was probably like 20 years old or something. I don't know. I didn't know nothing other than I made some money and pulled it out. I made some money and I pulled it out. It's kind of like you're winning at the casino, and as long as you keep putting the money in, you're eventually going to lose, Kane.
Yep.
Like, sometimes you got to walk away from the table. I feel like that's one of those moments where things are so far up, you should let your money rest. But
Yep. I mean, what you spoke about there in terms of kind of everybody thinking that, they're more skilled than they are perhaps right now. Do you think that extends even down to like the actual corporate level with like revenues and sales? Do you feel like that there's this inflation right now where everybody feels like, oh, I'm killing it, but it is just this extra kind of cash flowing around?
I personally encounter that with, I'm an investor I run a handful of companies. Like my circle's pretty large with people in the executive level. And I will say there is certain people that are grounded and they're kind of aware of the market as a whole right now, not stock market, but let's say the economy. And there's people that are kind of using this, let's say, increase in revenue and spending and whatnot kind of as it's because of me. And I'm like, I'm not saying that you didn't do things that resulted in that. I'm not sitting there watching what you do 60 hours a week at your Fortune 100 job, so I don't know. I'm sure there's things that you have contributed, because I know you're a sharp dude. But if we remove the fact that they have pumped trillions of dollars into the economy through, everyone that was not getting paid last year got paid, right? You got fat unemployment, you got stimulus checks. We're continuing to see that as it's dwindling off now, but it's still going on. It's like, well, they pumped trillions of dollars in, and a lot of people that didn't have a lot of money ended up having access to more money than normal. You can't be surprised when you see revenue going up everywhere. What do you think happens when the Fed pumps in trillions of dollars that the market wasn't expecting?
Right.
And then, like you, to your point, I'm wondering, is this day coming when the average household doesn't have that extra $400 to spend to Target this month?
Yep. Well, I mean, speaking of that, let's dive into this chart a little bit. I know before we started recording, we talked a little bit about it. There was some interesting insight there, but I'll start drawing some lines and you can kind of talk through the thinking, James.
Yeah, I'm not going in like crazy technical. I mean, this is just some things that you watch people do. You read some basic stock books and all that jazz. If you're crazy into technicals and lines and charts, you don't need to listen to me on this one. But my thought is, this is kind of where, when you look at the bottoms, that first line you drew, you grab the bottoms and you try to look at that trajectory, right? And you realize that's not really far off from where we're at right now. If you think of back 2009 to 20, before COVID, up until COVID, we had low unemployment. There was maybe some issues rumbling, but the economy seemed stable. People were employed. Wages were going up. It seemed fairly stable all the way back to, kind of post-recession, when I remember people saying, oh, Obama grew the economy too slow. And I'm like, it was a nice, steady growth. Like, we don't want this like crazy up and down, flash, crash, crazy up. Like, that's just nice rebound. That's how things stay stable, and we all have better lives when shit's kind of stable and at least growing. That's where I felt 2019 until like COVID was. Unemployment was low. People were starting to make more money. Wages were starting to creep up. Things weren't bad. Then I look at that second line you draw, and let's look at the peaks, and let's just kind of look at if we kept that trajectory of, we were probably due for a little bit of a downturn around COVID, and then we would have had another peak, right? Probably around 2021. Mm-hmm. That's kind of the line of where we should be right now. And it's a little more than 30,000, but let's just say it's 30,000. So, I mean, you're due for a 15% correction, which would be, 5,000-ish points, which would put you around 30,000.
Yeah.
My big issue is, Kane, there's that other line that you can draw that will cut across the bottom there. That's like the doomsday scenario. But if we just look at where 2019 is, that was probably around 22.5 if you hover over that point. That little dip under 2019. So close enough. That's where you.
Sorry.
That's before COVID. That's not that long ago. That's 2 years ago. It's a year and a half. It's a year and a half ago, 2 years ago, whatever. But when you look at from the time point of when COVID hit, it's a year and a half ago. That's not that far off to think that we couldn't go back there, right? We know that the COVID dip was crazy COVID panic, but would it be unrealistic to go back to that 2019 number if shit really hit the fan? I don't think that's that unrealistic, to be honest.
Right.
Now, the market might shoot up to 50 and then drop down to 40. I don't know, man. I'm not all that big into making predictions. I just like looking at what's possible and what's realistic.
Mm-hmm.
And I'm saying realistic because we're at 35,000, Kane, after the government pumped trillion after trillion after trillion into the economy. This isn't natural. It's not organic. We're only there because it was propped up. Even if the economy gets back to booming to where it was at 2020, you still have to remove trillions of dollars from the system. So when that stops, when people have to start paying their rent again, which is somewhere between, I read different numbers, between 11 and 20 million people. When they got to start paying their rent again, and that money's going to rent and not going into buying goods, what happens? When you have to start paying your school loans again, and that money's going to school loans and it's not going into travel and goods and cars, what happens? When you got to go back to paying your mortgage again. See what I'm saying?
Yeah.
When the money has to start going to paying your bills again, and we're not pumping in this crazy stimulus and unemployment, how do you sustain these numbers? And I think everyone's like, we're going to ride this wave as far as we can ride it, and I don't blame you. But is there going to be that like contrarian type moment coming where the shit hits the fan? And then it's going to be time to load up on good companies that just took a beating. Whether it's coming a year from now or five years from now, I think it's coming. The problem is this was so caused by kind of a monetary policy.
Yeah.
That there's really no way to work. We're already at like close to 0%, right?
Yeah.
There's not a lot of stuff in the toolbox here to fix anything. Went through a crazy home boom, right? It's how does it get better is my question. I hope it does. I want shit to keep booming. I want to keep making money. I want to keep growing companies. I want to keep making investments. But when you look at 2019, we hit a low of 22.5. And we know that we're basically only at 35 because of a tremendous amount of money pumped into the economy. How does it get better?
Yeah.
So
yeah. I think that's the right point, because like the idea that as an entire economy that we're in a better place than we were at the start of COVID, or at least it would be like 12,000 points better than when we were at COVID, like pre-COVID. It's hard. That's a hard line to draw.
It's not a hard line because there's places like Amazon and Target that those extra huge unemployment checks and the people not paying their school loans and rent, it's all going to Target and Amazon. Like, you can see why shit's getting pumped up. So that it does make sense. Where it doesn't make sense, to your point, is are we saying that the economy is in a better spot right now, organically, than it was
right.
February of 2020 with 4% something unemployment with some stability? I don't think anyone in their right mind can say that. Look at how much trouble we're dealing with staffing right now. And you realize that we're only here because of the government pumping in money. And it's like, what happens when you pull that plug? Maybe we flatline and it just stays at like 35,000 plus or minus 1,000 for the next 2 years, and it's just stagnant. I don't know.
Mm-hmm.
But back to, I know a guy that thinks that, he's part of the reason why their revenue's up crazy amount of money right now. And I'm like, no, this America's got a bunch of disposable income.
Yeah.
And what's going to happen to that guy when it's like, when revenue falls 17% because the plug's been pulled? It's like, well, everyone always wants to kind of take the pat on the back when shit's good. Mm-hmm. And then when it falls, it's not their fault. They're going to say, well, when it falls, the economy's crashing. It's not my fault. I'm like, but you were just trying to claim that the reason why things are booming is because of you, but it's really because of monetary policy. Which one is it?
Yeah.
Definitely interesting times to come. There's more and more I've been running into people that, I didn't know I was so good at this. And we're going to see if you're good at it. over a 5-year period. Now, I mean, shit, you're probably better off just buying some index funds. Well, it's hard to beat the S&P, right?
Mm-hmm.
But it's just one of those things. Since November, most people won unless you made stupid investments. And it's just easy to sit around and say, hey, we're running our company great, our revenue's booming. And you're booming because people got a shit ton of extra money. Or, I got my clients, 18% return. You got your clients 18% return because everything's going up. I mean, I wonder what the average, Dow ETF went up in just 2021, right?
That's true. Yep.
Everyone looks good when the shit's going up. How good do you look when it's going down? Can you protect and save that investment? And I know there's no like time in the market. That's why I say, like, you make some money, you pull it out. You make some money, you pull it out. It's just I use this analogy of if I leave Detroit and I drive to Miami and I speed the whole way, I will probably get caught a half a dozen times speeding or more. If I just don't take my foot off the pedal and I remain 15 miles an hour over the entire way, I will get caught multiple times. If I randomly take my foot off the pedal and do the speed limit for a while and I keep mixing that up, I bet I greatly reduce the probability of me getting a ticket or how many tickets. That's the same thing with the market, right? And everyone's like, oh, when things crash, I'll just put an order in. And it's like, hey, have you ever tried to get out there in a crash? Yeah, it's not that fucking easy. Yeah. Unless you set a really low limit or you put it at market. Do you want to sell your shit at market when in the middle of a crash?
Right.
Yeah, you can get out. But the problem is when everyone does that, it makes the crash worse. Like the last thing you want is everyone selling at market. Or just, you panic sell and then you wonder why we get these huge sell-offs. Look how fast that dip happened at COVID. It wasn't one of those, it's going to drop by 20% over 4 months. That's February 14th. You had about 30 days and a hell of a lot of, who knows how much money that was. Wow. I mean, shit. A lot of cash right there, Kane. And there's probably certainly some worse days in there. Every day wasn't down 500. I'm sure there's probably some really bad days in there. But I just one of those things. You start looking at how do we get here? Should we be here? You start looking at some of these lines and whatever. I mean, we're looking at these like end-to-end points and looking at peaks. I mean, it's like some basic ass analysis shit, but it does give you an idea. Like, well, maybe things aren't. Maybe we're right where we should be. Maybe we're 5K over where we should be. I guess you look at the market and say, where would the stock market be if we didn't inject the trillions? And if you can figure that out, you can probably figure out where the next correction's going.
Right.
But if I figure that out, I'm gonna go set up some shorts and some puts, and I'm gonna get some shit ready. I don't have that answer, man, because the variant could pop up and get worse, and then they could just pump more money in. It's really hard to make those kind of investments right now because the government can come along and just fuck it all up. If a government keeps their hand out of stuff, a little bit easier to make those predictions, or you can actually go make that investment, right? But it's tough. It's really tough because the government you could have your puts in and your shorts in. You could be all set to go. Everything makes sense. It's about to happen. And the government's, we're going to put $1.2 trillion into the economy. Like, oh.
Yeah. Yep.
And the flip side, it's you could have a whole bunch of, long stocks and calls and be banking on the government to keep pumping money in. You think it's going to keep going up and up and up. And then they're like, we're pulling the plug, and then you're going to lose. It's
right.
It's not just the market's irrational, the government's kind of irrational.
That's true.
It's this whole other level to the game right now, and it's way beyond my means. But trying to make money, whether it moves up or down, whenever I can. But if it goes straight up, it ain't me. I'm just along for the ride, man. So
yeah, I hear you.
about all I got for this one. We'll see how many people, if you go Google that quote, you're going to figure out who it is. But I'm sure someone will figure out where that quote's from. Don't say who it is, but do you know where the quote's from?
I don't know.
Oh shit! You probably weren't even born when the movie came out, though. You probably.
I'm gonna have to Google all this stuff now.
Oh, shit, you're like 19 years old or something. Yeah. Anyways, I'll catch you, man.
All right. Thank you.
Yeah.